Hello everybody, welcome back. Let's have a look at the situation after the FOMC. So I'm just focusing on oil for a second. You don't really, no one's really too bothered about that. But since since I was trying to get in on this one for a trade, we're sort of moving up slowly. Yeah, it's looking good. It's definitely looking good for oil. That would be unless you obviously need to buy petrol in the next 12 to 18 months. It's probably going to see an increase in price. I think we're going to go for a breakout, but no one's bothered about that. So we're not going to look at that. We're going to look at Bitcoin. So, Bitcoin, what are you up to? Get off this 15-minute chart, back to the daily. There's a couple of things to focus on over here. Sorry, I was doing a private stream last night for a top tier Patreon. What can I say? I got different levels, different levels of tutoring that take place. Right. So what we're seeing here is a clear breakout above not just the horizontal but moving averages and avoiding that death cross. And actually, yesterday coming down to retest the what could have been the death cross, which is effectively a golden cross still. So look, we're above all moving averages with the 200 simple up here at 64,000, the top of the horizontal box 65,000, and then beyond that you got the trend line 68,500. Looking at momentum over here, just going from strength to strength to strength to strength to strength, creeping up above the 0 point, so it does look like it wants continuation, to be fair. The only thing that we could, I suppose, assume for downside would be a bit of a move down into the recently created, literally just over the last 24 hours, golden crosses on the 4 hourly, which would be a 5% pullback if it were to happen today. Not saying that it's going to, but if it were to happen today, that's where it come down to, and hopefully that would be an opportunity to go long, really. So it does look tasty, to be honest with you, and that area down here is basically 59,000, not too different to the daily, really, 59,300. So lots of stuff going on, really. What we want to see as well would be the Itchy Cloud play. So we've got a green portion just being generated today. It's not obviously confirmed anything. We've got a conversion baseline cross down here. Obviously, price is above the cloud. The cheeky span is deep inside this cloud over here. So if you were to get a pump signal today, you'd have to close above 64,800, arguably 65,000 really. Candle close above that cloud at that level. Or we could wait until the cloud breaks, which will give you 1, 2, 3, 4, 5 days. And then if that's the case, the cheeky span can close anywhere outside of 60,500. You get yourself a pump signal. So that's what we'd be looking for as well. That pump signal should take you up to the next area of resistance, 65, maybe 68,000. I like it. I do like it a lot. Let's have a look at stocks, the US 500 pre-market. What am I doing on a monthly? That's crazy. So if we can just zoom in a little bit. So the we call it a symmetrical triangle or rising wedge or whatever you want to call it. It's a formation. It does look like we're breaking out of that formation now. I mean, we are breaking out of it. There's no question about it. We are breaking out. So at this point, we've just got to work out whether it is losing any kind of momentum or it's particularly overheated or any reason for it to pull back. Now, moving averages on the 4 hourly haven't even got outside of here. So it does make it seem quite likely that we come down to retest these areas. 5,655. Get yourself a support there. Move back up. As far as the chart is concerned, the V-shaped recovery has really kicked into fashion at this point now. Really, really gone into overdrive. There was your crash that took place in early holidays. There was your V-shaped recovery. There was your potential double top. Got picked up actually quite neatly on a weekly moving average over here. Weekly 21 exponential. And then bang, ricocheted all the way up. So look, I suppose it's the golden cross V-shaped recovery and then some formation that appears to be playing out. But that 50 basis point is certainly going to help over the long term, I would imagine. But we'll just have to wait and see. I don't see anything fading momentum wise over here, so it does look good enough to continue. I'm not really particularly afraid of what it is that I'm looking at. 1 hourly has got a lot of bearish divergence, so maybe we do pull back a little bit today, only to get bought back up again. Based on the 1 hourly. you can get picked up as early as the top of the trend line or as low as 5,600. So opportunities to go long on here. There's even an opportunity to go short, but I wouldn't really short a breakout. It's kind of crazy. I'd wait for a pullback and try to go long on it if anything else. But overall, it looks like, does appear, that the summer consolidation for crypto is probably over now. And the longer, larger, more sustained uptrend shall beginneth. Looking at the total two, yeah, we've managed to hold on mostly to this $812 billion market cap area. And so really we're waiting for its own breakout, which would take place around 950 billion. And then the projection continues. So I suppose the overall analysis from back in last December is the most appropriate. Consolidation is due. Consolidation will take place throughout the summer. Consolidation will end after the summer. Consolidation will turn into accumulation and a breakout in the fourth quarter, and then throughout next year, generally the last portion of a bull market will continue. And that's in the absence of black swans. So look, it all looks like the original analysis from last December, when we were exiting altcoins after several 100% pumps, has been the most appropriate way to deal with it. I suppose, this goes to having being able to enjoy a weekly chart beyond anything else. Weeklies are usually the best guides, and it takes away from a lot of the noise. It's much harder to get into hardcore futures positions when you're doing that, but overall, the fractal, and I don't like fractals for the most part. This is, if anything, it's not about, we're going to go up, down, up, down, up, down at exactly the same place. It's more of a guide, really, and the guide appears currently, we've not broken out, appears to be a relatively decent guide. All that dollar cost averaging that took place over the last few months, should all be significantly in profit 3 to 6 months and certainly 12 months from now. So yeah, quite happy with myself, quite pleased with it all. Right, that is all there is to say about it today. So effectively, there is a possibility of a pullback today of up to 5% on Bitcoin. Possibility, not guarantee, possibility. And that is the only thing that I would be cautious about. And if that were to happen, it would be an entry point between 59,000, 59,500 or thereabouts for a continuation, probably to new all-time highs over the next few months. Okay, so positions, cautious, low leverage, relaxing, chilled out. We're about to, in my opinion, creep back up and break through resistances over these next few months. I suppose as we've anticipated since last December. Right, so that will be it for today. If you want to join the Patreon, there is a link in the description below. Alternatively, just have a nice day and take it easy.